Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin, Dogecoin, and gold and discuss the real winner. If you guys like the content, please subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So why are we discussing these three? Well, Bitcoin is basically the blue chip of cryptocurrency. It was the first one, and it has stood the test of time. Dogecoin, because it's gone on an amazing rally recently, it's all over the news, and also because it has outperformed Bitcoin recently. And gold, primarily because of this tweet by Peter Schiff about a day ago. So far in 2021, he says Bitcoin has lost 97% of its value versus Dogecoin. The market has spoken. Dogecoin is eating Bitcoin. All the Bitcoin pumpers who claim Bitcoin is better than gold because its price has risen more than gold's must now concede that Dogecoin is better than Bitcoin. So if you're not familiar with Peter Schiff, he's a huge gold bull, okay, and he's often poked fun at Bitcoin over the years. So let's break this down in a fair way. Okay, we're not just going to make random tweets and not back it up with the data. Remember, this is a data-centric channel, so what we're going to do, we're going to back it up with the data. First of all, we'll look exactly at what he is saying, okay, and show that he's actually right. I mean, Dogecoin has recently been outperforming Bitcoin if you measure it from the beginning of 2021. As measured from the beginning of 2021, Dogecoin has gone on a ridiculous rally, and Bitcoin has been seeing more methodical moves up, okay? Not anywhere close to what Dogecoin is experiencing. Again, you also have to remember that the market capitalization does play a role in the amount of volume it takes to move one of these coins. However, going back to tweets like this, when you argue very specific time frames, what does that mean you're doing? Well, we have to talk about what is cherry picking. What does it mean to cherry pick data? I see this in finance all the time. You know, someone will pick a very specific time frame to say their crypto or their stock, whatever it is, has outperformed another one, therefore it must be better. So let's actually look at the data past or before 2021. So if you normalize the ROI of Dogecoin from inception, you can see it's been around over 2,500 days, and it's going up almost 1,000x from the bottom. From inception, I should say, not the bottom, because once it launched, it actually bled a ways before actually going back up. But up, going on almost 1,000x from the bottom, or from inception. If you put Bitcoin on the same chart, what do you notice? Yes, Dogecoin has outperformed Bitcoin recently, but if you normalize it to where Bitcoin started, Dogecoin isn't even close to where Bitcoin is. Dogecoin isn't even at a modest 1000x, whereas at this point in Bitcoin's life cycle, it was more than 2 orders of magnitude above where Dogecoin currently is today. In fact, comically, the current phase in Dogecoin's life cycle now actually happens to coincide with the 2017 peak for Bitcoin in terms of days after inception. Okay, that is one thing. It's the data. That's what the data says. If you want to be fair, you have to go back and look to see, okay, how have the assets performed? Yes, Dogecoin has done relatively well, but if you normalize them from when they launch, Bitcoin is up a modest 10 to the 6. 10 to the 6. And by the way, this is a logarithmic scale in case you didn't notice. This is 100, 1,000, 10,000, 100,000, a million. Bitcoin is approaching 1 millionx from inception. Dogecoin is approaching 10 to the 3. Okay, and you could more so compare it to where Bitcoin was at the time, which was still more than 2 orders of magnitude higher than where Dogecoin is. Okay, now if you look at modern portfolio theory, which I'm sure Peter Schiff is familiar with, and you look at Bitcoin, Ethereum, and Dogecoin, and we calculate out our Sharpe ratio based on historical returns, using that as our expected returns. There are some assumptions there, of course, and historical volatility. You see that the portfolio, this is 100,000 simulations. We also just solved it with quadratic programming. If you solve for the portfolio, which maximizes your Sharpe ratio or your risk-adjusted returns, you get 65.6% Bitcoin, 25.4% Ethereum, and surprising to me, 9% Doge. Okay, and the reason is because of these major moves that it occasionally does. Okay, so what do you also notice? Well, the expected return annually for the portfolio that maximizes your risk-adjusted returns has almost 66% Bitcoin, and your expected annual return would be over 100% plus or minus 65%, meaning to within one standard deviation, or 68%, your expected return is maybe 101% plus or minus 65. So let's just say 100%, so maybe between 35% up to 165% to within one standard deviation. That's just because Bitcoin is super volatile. Yes, there's going to be some years that are down, but most years are up. Okay, so what can we look at from here? Well, what about gold? If you run the same type of analysis for gold, silver, platinum, and palladium, you get a portfolio that for maximizing your risk-adjusted returns, you would get a decent amount of gold in that. I think it was over 60%, but your expected return might only be 6%. I gotta say, people who hold Bitcoin don't get out of bed for 6% APY. They don't get out of bed for that. Okay, so when we go back and look at a normalized chart for Bitcoin and Dogecoin, yes, Dogecoin is doing incredibly well recently. We're not disputing that. What we're saying is, yeah, it's doing well, but if you normalize it to where Bitcoin was at this same point in its life cycle, it was more than 2 orders of magnitude higher. Okay? So the real question is, what if you put gold on here and you normalize gold? Well, I didn't spend a whole lot of time, admittedly, looking for gold data sets that go back hundreds of years. I quickly found one that went back several decades. You can see we're looking at over 13,000 days out from inception. If I spent more time, I could probably find data for gold going back even further. But looking back, say 50 years or whatever that ends up coming out to be, what do you notice when you normalize it? When you normalize the ROI of gold? It's doing okay, right? I mean, 10, 20, 30, 40, maybe 50x or so. If you go back several decades, Dogecoin's way up here. At the same point, and the same point when we normalize it like this, gold was hardly doing anything at the time. Dogecoin is absolutely taking off. So, the question does not become, is Dogecoin better than Bitcoin? The question becomes, is Dogecoin better than gold? Okay, now again, I'm sure that anyone who's super into gold, they're gonna say, hey, you should go back even further because we know gold's been around forever, basically. I can assure you that even if we went back another 100 years, it's not gonna make up for the several orders of magnitude you would have to go to get to the same ROI of Bitcoin. Okay, it's just not gonna do it. So let's just go ahead and dispel that myth right now. Okay, so when we bring it full circle and we go back and look at the tweet where he says that Dogecoin is better than Bitcoin, because a lot of times Bitcoiners will say, hey, what's so great about gold? Bitcoin continues to put in consistent returns. It stands the test of time. It is a better store of value than gold. And look at the price history, right? The market has spoken. So Peter is saying, hey, well, if this is the way it is, then Dogecoin is better than Bitcoin. What he's doing, in my opinion, is he's looking at too short of a time frame for it to make any sense, and sort of looking at the grand scheme of what's going on with Bitcoin, Dogecoin, and gold. And so to say that Dogecoin is better than gold, or Dogecoin is better than Bitcoin, by only looking at a few months of data is not doing anything justice. So again, I say to you, the question is not whether Dogecoin is better than Bitcoin. It's the fact that actually, measured this way that he spoke about, it's that a meme coin, an altcoin that basically has no utility, is better than gold. Thank you guys for tuning in. Subscribe to the channel, and I'll see you next time. Bye.